I'm Charlotte McLeod with investingnews.com, and here today with me is Lobo Tiggre, CEO of independentspeculator.com. Thank you so much for being here.
Always glad to be on the show with you, Sean.
Yeah, really good to be catching up with you in person after our last conversation back in, I think, November. So this time around, we're here at VRIC, and where I thought we could start is with one of you're on stage a number of times today, but with your presentation this morning, which was very well attended. It's about the Trump trade. And I think as we sit here literally on the eve of Inauguration Day, that's a topic that everybody wants to hear about. So what could you tell us about that?
So the short version is, whether you love Trump or hate him, the one thing I think everybody can agree is he's an agent of change, right? To put it nicely, if not of chaos. So, this might happen, that might not happen. There'll be tariffs, there'll be responses to the tariffs. Who knows how all that will play out? What we do know is that there will be disruption, that there will be volatility. So you want to brace for volatility. Gee, this isn't a great revelation, Lobo. How's that really helping us? And where I went with this was really something that my mentor, Doug Casey, taught me, from early on, and that's to make volatility your friend. And, one way of looking at this is, who knows what will happen to X, Y, or Z. But if there's something that besides the immediate term, besides the short-term volatility, is there something you want to own, then that volatility can give you a buying chance. Like if you're into gold and there's some great gold stock that you always wanted and it's gone up because gold's been at nominal all-time highs. Well, we saw gold wobble significantly after the election. So depending on what Trump does on day one and week one, month one, we could actually see big volatility in gold, and that could give you a chance to back up the truck for that stock that you missed. Things like that. That's how I see that. Trump, he's going to do this. People say he's going to do that. Maybe he will. Who knows what the consequences will be? But the one thing we do know is that he's going to upset a lot of apple carts. And like Doug teaches us, volatility can be our friend.
Yeah, I think that's a good one to go into just ahead of what's happening tomorrow. And I think it works. There's going to be a lot of things happening, and hopefully we have you back to talk after Trump has been in office for a little while longer and we have a clearer picture. So good to get that for now, though. So I also want to get your help on another current event, unpacking the recent CPI data that we got. So a lot of talk about core CPI and seeming optimism around that. But you're talking in your weekend newsletter about how essentially that's a cherry-picked way of looking at the numbers. So
Sorry, let me jump in. That is cherry pitch. That's BS. Really. The core rate, the supposedly more important core rate, it came down by 0.1%. Like the smallest notch that it could possibly notch is what it came down. But if you look at the chart, it's flatline. It went up, it's not going anywhere. That's your definition of sticky inflation. It's multiple months. It's just going sideways. The noise in the last print, it could have easily been, a half of a tenth would have been rounded up the other way, right? So I'm not big on conspiracy theories, but it's hard to see a situation like that where the headline number goes up, CPI. The Fed says that they care more about PCE, that's the preferred measure, and then they look at, like super core, all this stuff. But at the end of the day, and Powell said this in his last conference, the goal actually remains CPI. That is the inflation number. And they're supposed to get that number down to 2%. They may care about the other ones, but the goal is to get CPI down to 2%. And it's been doing this since last September. Like, how do you ignore that and focus just on this really insignificant movement, fluctuation in the so-called core rate? So the headlines should have been, core remains stubbornly, sticky, and headline CPI rises. That would have been a more honest headline. So it's hard for me to see this as an accident when just about everybody says, "Oh, yay, core CPI went down." It's understandable why, what was it, Hillary's phrase, the undesirables. It's understandable why the undesirables don't trust the media when this is the kind of reporting we get. So I don't mean to rant, but the takeaways here are that inflation is sticky. This matters. As commodities investors, as metals and mining people, this matters. That sticky inflation is bullish for commodities. It's particularly bullish for, the key industrial metals like copper. And one more thing. They will say, oh, it's just a bump on the way down to 2%. That would be more credible if it was just in the U.S. and everybody else was still beating inflation. But it's not. We've seen an uptick over the last couple of months around the world in the leading economies. So I don't know if you've interviewed Michael Howell with his global liquidity thesis. It's like Lynn Alden with her fiscal dominance thesis. All of these things to me seem related. So, the fact that governments around the world responded in similar ways, and the fact that we're seeing this resurgence in inflation around the world makes it very difficult for me to accept that, oh, this is just a bump on the road for the U.S. and we're headed for 2%, easy peasy. I think the Fed is in trouble.
Yeah. And of course, I was going to ask you to extrapolate on what does that mean for inflation, which we've talked about now, and the Fed moving forward in 2025. So in trouble, what does that look like?
It looks like, if I'm right, and if inflation is going to continue going back up, then they really should, according to their principles, they should be raising rates. That's not what they're guiding. They're talking about maybe pausing a little bit longer. Maybe, there won't be as many rate cuts as previously anticipated. I'm not the only one to suggest that there might be hikes on the table, but it's not coming from the Fed. So it's not just that they're stuck because they gave this guidance, though I think that is an issue. And I think for Powell and his legacy, if he has to flip and go back to raising rates after kind of taking a victory lap and we're on our way to 2%, and, I think that's a problem for him. But let's say he's man enough to say, yep, I made a mistake. I'm going to have to flip-flop. He doesn't want to be Arthur Burns. He wants to be Paul Volcker. But he might have to do an Arthur Burns here. And let's say he does that. What does that do to the federal budget? We've got Elon and Vivek who want to trim trillions of dollars for the federal budget. You could almost say, what good does that do when the debt payments are already more than the military spending? The debt payments are already $1 trillion, and they're going like that. They're going vertical. So if Powell has to raise rates to fight inflation again, that is a rock and a hard place. It'll be really interesting to see what they do. Now maybe that's the other thing is Powell has also stressed how, we have, historically low unemployment. Well, that's not true. If you look at the new unemployment number, it looks like that, but they're comparing to 50 years ago when the number was closer to what we now call the U6 number, which is twice almost the current unemployment rate, right? So they're saying that we have this historically low unemployment number. How does Powell tell the U.S. and the world that, no, we're going to ignore higher inflation, even though we said 2% was goal number one, because we're worried about the labor market, which is their other mandate, which is at historically low unemployment numbers. Like, those things don't fit. If unemployment was skyrocketing, well, then, he'd get a get out of jail free card. Now we have an excuse. But as long as they're maintaining this fiction, blowout job report, oh yeah, everything's fine on the unemployment front, then how does he raise rates? And if he doesn't, we got 1970s all over again. We got rising inflation, and we're not. Rock meet hard place. I think that's exactly where the Fed is right now. Very interesting for anybody invested in anything real. Commodities at large, but I think particularly for monetary metals.
Right. And yeah, let's take a look at gold. So gold liked what it saw seemingly on Friday. We got back above 2,700. Of course, we don't know what we're going to see tomorrow when we have Trump coming in. But any thoughts on gold's path forward in 2025? What can we say?
Yeah, well, I'm very bullish. As you know from our last interview, I'm still sticking with my copper as being my top bet for 2025. But that doesn't mean I don't like gold or silver anymore. I just see more potential upside there. And think about it, gold did fantastic in 24, pulled a hockey stick, right? To ask for gold to do another hockey stick after that, that's a big ask, right? So, but that's, so it's difficult for me to say, just rah for buy gold because, when we're at that kind of level. That said, these things that we're talking about, are and should be very bullish for gold, which gives rise to a really interesting thing right now. Like right now, as we're speaking, this thing that you mentioned, gold responded positively to CPI. That's the opposite of what's it been doing for years, because gold doesn't pay interest, right? So if anything that smacks of higher inflation, it hints that the Fed will be tighter, which is seen as bad for gold. But that's not what happened this time. And it wasn't just this time. We saw the same thing with PPI and, the labor report too. It's really interesting to see gold in the last couple of weeks has started acting like an inflation hedge should. Now, it's not enough of a track record for me to say, yeah, gold's going off to the moon. And especially, again, after the hockey stick last year. I hate to be the rain on the parade, but that's my thing. But it's very bullish. I mean, it's really interesting. And if, in fact, these COMEX traders and these people who sell gold every time there's high inflation, if they got the memo that, no, gold actually is an inflation hedge, and, these higher inflation prints are bullish for gold. If that's what's happening now, it's hard not to get pretty excited about gold this year.
Okay. So maybe.
And by the way, silver tracks gold still.
Okay. And in that case, gold and silver stocks, are they on the shopping list currently?
Yes, they are. But I think, and people might have been cheering what I just said, and to give them a chance to throw rotten tomatoes at me here, I got to say, I mean, you've probably heard it from my mentors, Rick and Doug over the years, about how, silver is such a tiny market. When the market decides to allocate there, we get stupid valuations. Or Doug's famous phrase about it's like the contents of the Hoover Dam trying to fit through a garden hose, right? We've been waiting for this flood tide to raise all the ships. We have data now from 2024 where gold hit nominal all-time high after nominal all-time high. And the stocks basically did nothing. I say basically, I should maybe say on average did nothing. That's much more accurate. And that's important because the better stocks actually did really well. If you were a stock picker and you had the right ones in your portfolio, you did much better than gold did. Okay, maybe not as well as NVIDIA, but that's a whole other thing, right? But there were also companies that failed to deliver, that had political problems, operational problems, margin problems, that didn't make good use of the higher gold situation that we were in. And so actually, I think the markets worked fairly well. The better operators got rewarded, the more successful discoverers, the people building their mines on time, on budget, and so on, they did well. They did great. The ones who didn't deliver didn't do so well. You lump all those together, on average, the stocks did nothing. So the answer to the question is, I'd like to believe that, rising tide and everybody get excited. We could see $3,000 gold this year. And what headlines would that generate? And, if the rising tide lifted all ships, it should be great. But the immediate data that we have from 2024 is that didn't happen. And we had records. And, silver hit a 12-year high, not an all-time high, but still 12-year high. And the rising tide did not lift all ships. So, sorry, dear audience, what I'm saying is right now, the evidence is that we are still in a stock picker's market. I wouldn't buy an ETF. I wouldn't just buy the whole sector. I'd be very careful about which stocks I picked.
Yeah, well, I know you're the typical raining on the parade person, but I've heard from a number of people over the last week or so, not just here, about, this whole rising tide lifts all boats in gold idea. And people seem to be thinking, okay, maybe even moving forward when we get $3,000 gold or something, that's just something that won't happen this time. What do you think about that?
Well, that's kind of what I'm saying. Yeah. It's always happened before, so that's the expectation that it will. But what if it doesn't? Let me put it this way. My friend and mentor, Doug Casey, is famous for saying many things, but one of his sayings was that these crappy little mining stocks are the most volatile securities on earth, and that's why we like them. They, these huge swings can make fantastic profits from lows to highs, buy low, sell high, and so on. But we live now in a world where, Bitcoin can fluctuate more in a day than gold will in a year. So in a market like that, if you're a gambler and you're chasing momentum, why bother with these crappy mining stocks when you can in a day or in a week make the money it might take you a year to make with mining stocks? So I'm not saying that Bitcoin has eaten gold's lunch. Be very clear about this. I'm not saying, gold 2.0 has rendered gold 1.0 obsolete. That's not what I'm saying. I'm saying that in terms of market momentum, of manias, with other things going on in the world, and some of them being even more volatile than mining stocks, maybe this time is different in that regard. We'll see. I'm not saying it won't happen. I'm just saying I wouldn't bet the farm that it will happen. Therefore, I want to pick the stocks that I think have the right stuff, whether or not the rising tide lifts all ships.
Okay. Thank you for making that point clear. So as you said, in November, I think everybody knows that for 2025, the highest confidence trade is copper. So I told you I would bring more copper questions, and I know you're just now fresh off the copper outlook panel here. So I think first and foremost, you said during the previous conversation we had, you weren't rushing out to buy copper stocks, although it's the highest confidence trade. So is it time now to start picking them up?
Well, I was close to pulling the trigger in December, actually. There was, the copper was down, some of the stocks were down, great companies making money, nothing wrong with it. Copper dipped under $4, which, come on, it's not like 70 cents in the 1990s. It's $4. It's not a bad price. But the stocks were down, and I was tempted. In fact, I had an idea to sell puts on one company, and the stock dropped so much that before I could act, it was already at the price at which I would have been put. But I didn't pull the trigger because we've got Trump shock incoming. As we're recording, we literally have Trump tomorrow. We'll see what he does with his executive orders. And I remember the last time he did this, copper took it on the chin, mining stocks writ large had a bad year. In 2017, when Trump, really ratcheted up the trade, let's not say trade war, but, the trade friction with China, that was bad for industrial minerals. It wasn't great for gold either. It was a rough start to 2017. And, the past doesn't have to repeat itself. May or may not even rhyme much. I don't know. But that data tells me to be very cautious about assuming that copper will go like this. And the funny thing is, though, that despite this, copper's actually had a pretty good start to the year. It's up to 414, I think, today. So, not a huge move, but I think a 5% move or so from the recent low. And in the face of incoming tariffs and disruptions and who knows what will happen, and by the way, the retaliation to the tariffs, it's interesting. So the answer to the question is, I don't know what's going to happen, but there's a significant chance that near-term volatility will create really great buying opportunities. So if I could buy something that I like now and get it for 20%, 30% off next week, why would I do that? Now the flip side will be, well, why would I not wait? Well, the answer would be, well, what if it's 20 or 30% higher next week? Well, I don't think that'll happen. Like if there's less disruption here than I expect, I think we may see a more steady increase over the year ahead. I don't see anything coming out of the White House that's going to send, copper to $5 the next day or something. That's just incredibly unlikely. So I'm weighing the odds, and I think the odds are that I'll get it. There's a reasonable shot at really great shopping opportunities in the near term, and then we'll see what the tariffs are, what the responses are, what this specifically implies for each metal. Does Trump exempt copper because it's a critical mineral? He could do that, right? We don't know. So we'll just see. But don't get me wrong, right? So I'm waiting. I'm hoping for this buying opportunity, and if I don't get it, I miss the bottom. Boo-hoo. There'll still be tons of money to be made over the year ahead, and frankly, in copper, many years ahead. The supply constraint is so huge, so intractable. I've said this before, I think, to you. I see this as actually like a multi-decade thing, and I've been waiting, actually, for a couple years to deploy into this, and I think that we're getting there now. So I'm pretty excited.
Okay.
This is the Lobo equivalent of pounding the table.
Yeah.
Give it.
Yeah. This is pretty excited for you. So, all right. So copper, I was going to ask you, when would you know that it's time to buy, which I think we've covered. So I know you don't name names, but can we talk about what types of copper stocks interest you? Could be, what stage or other
Sure.
attributes.
Well, partly it depends on your own marching orders, your own investment time horizon, your risk appetite, and so on. But I think it's interesting that the biggest and the best in the space are still relatively on sale. I said copper's had a good start to the year, but it's not soaring or anything, and many of these stocks are well off recent highs. So that's I can't quite call it a no-brainer, but it's kind of close. If you're bullish on copper and the best names in the business, like, who knows which little junior is going to make a big discovery? Nobody knows that. Not even Rick Roll, not even Doug Casey, certainly not me, right? That's a much more if rather than when question. But if you have a continuously profitable producer that has growth on tap or maybe has made a new acquisition and it goes on sale, your risk for that is very small. Now, maybe it doesn't have 10-bagger potential if it's a big company, but, I'll take a double or a triple with much less risk, rather than swinging for the bleachers on a 10-bagger all the time. So I think that's the easy answer is, look for great companies that are on sale. Now, the next thing would be, that I love the pre-production sweet spot. So if there is somebody that's been moving the copper project along and now they're close to that, that would be really interesting to me. And then I'm very risk averse. So I don't like, generally speaking, pre-discovery exploration. But if there's somebody moving a copper discovery along, I think in this day and age, that's really important. This is really one of the main takeaways from the copper panel we just had here at the show, was that, the majors, this consolidation, there's a lot of M&A going on. These companies are buying each other out. That doesn't bring any new copper to the market. Company A buying company B doesn't produce one more pound of copper. It just gets rid of some G&A. So, we haven't had enough investment in the space. We haven't had enough discoveries. Permitting is extremely difficult. Where's the new copper going to come from? And now I know that discovery is hard. This is the hardest part of the game. The early part of the Lassonde curve, that's the trickiest. But I think we're going into a stage where that is so necessary. We need these new discoveries, and we just don't have them. That for the people that can deliver that, there's going to be big money to be made there.
Okay, and I think I've got one more question on copper, and this is price. Price in 2025. You mentioned we're off to a good start for the year. Who knows what's really going to happen? But there's this idea, Dr. Copper. It's the bellwether for the economy. Does that still hold true, or is that kind of an old?
Yes. Well, so that's good news and bad news. The bad news is if you see weakness in the global economy, which we do, right? Europe is in all kinds of trouble. China miraculously somehow pulled off its target of 5% growth at the end of 2024, they say. But we also know that in that last quarter, there's a whole bunch of, the trade deficit went huge because of all these people trying to front run the Trump tariffs and things. So who knows how much China's economy was goosed by Chinese companies trying to get ahead of those tariffs and things. I don't know. But be that as it may, 5% is half of what China's growth used to be. And, they've had stimulus after stimulus. If a Western country had 5% growth, we'd be cheering champagne, right? Ooh. But for China, that's kind of like, meh, not so bad, right? So you look around the world, and there's plenty of reason to be concerned about Dr. Copper. The answer to this, in my view, and I think this is why I was wrong about the undeniable recession in 2024, is Lynn Alden's fiscal dominance, the fiscal policy. And we see this in China. It's happening in Europe too. It's happening in the U.S. Those money helicopters, that liquidity, that global liquidity is there. So here's the thing. I think that makes copper go up this year. And copper is still relatively cheaper than gold or silver or uranium, my other favorite metals. That's why copper is my top pick. But you'll need to be careful. Again, this rising tide thing, in that world, copper's going up, but so is energy costs, so is your steel, your tires, everything it takes to mine the stuff is going up too. So you're still going to want to be a stock picker, I think, here. In other words, just because the metal goes up doesn't mean the companies will be any more profitable. You've got to pick the best ones.
Yeah, it seems like that's certainly a theme for this year ahead. Okay, we're getting toward the end. I'm going to throw in one question on uranium as well, just because I was thinking back to this time last year. There was a lot of enthusiasm and excitement about uranium at this conference, and you, unfortunately for some people, accurately rained on that parade. So I'm curious about your approach to uranium right now, and also how your exposure to this sector has changed over time. So when we had that moment last year, were you selling some uranium stocks at that time? How has that changed?
No, I didn't sell at that time. I did sell some, but because it was the time to sell the story. It wasn't because of the market or the price. I added some as well. I bought the dip, and I'm looking to buy the dip more. Okay, so this is me being really excited here. The demand story has been there all along, and it's been ratcheting up all along. But lately, it just seems like, man, it's gone from every week there's some new source of demand for uranium to almost like every day. Like every day, I see some story or some new design, something gets approved, some country's moving ahead. It's just, wow. And at the same time, a difference between a year ago and now. A year ago, we had just gone up to 106. We had a hockey stick, and it wasn't rocket science for me to say, hey, a bit of a correction here wouldn't be a surprise. Now we've had the correction. And the demand hasn't gone away. The correction's already in. And here's the thing. That it's not just, it's gone up, so a correction is likely. It's gone up, and it incented new production. People started bringing mines out of mothballs. They started building projects with low costs. So there was reasonable, actually, for investors in the market to say, well, maybe, as Rick Rule says, high prices are curing high prices. It was reasonable people to say, well, if all this low-hanging fruit gets picked, maybe we'll have too much uranium the next year or something. Maybe we'll overdo it. Well, that was reasonable a year ago. Today, that's not reasonable. Basically, everybody is delayed, behind, over budget, or underproducing. The big question really is our friends here in Canada who promised 2 big ramp-ups with high output. And the report card is yet to come in on exactly how that's going. But basically, everybody else, even in Kazakhstan, the world's largest and lowest cost producer, officially moved the goalpost. They were tired of missing their targets, so they moved the targets so they wouldn't have to miss anymore. And other companies in the U.S. and around the world, in Australia, they've been delayed, they've been behind. They're like, well, we'll only produce this much this year as we ramp up and so on. So this is important. It was reasonable a year ago to say, well, gee, all these miners, they're mining more. They're bringing these mines back up online. But now we can say almost all of them have run into trouble. It's not happening, or it's not as much and not as fast as everybody feared. Meanwhile, the demand just keeps going like this. Not to put everything back on Trump again or anything, but if he does end the war in Ukraine, as he said he would, in 24 hours, maybe not 24 hours, if that happens, and Ukraine remains an independent country, they've already contracted to build a score of new reactors. I mean, they're really gung-ho. All of Eastern Europe is. So we could actually then see those plans for a whole bunch of reactors, not just in China, not just in BRICS, but in Western allies moving forward. So it's really exciting. I mean, as I always say, absent a major nuclear incident, it's hard to see anything in the resource sector that looks more certain to me. The only reason why uranium is not my top pick for this year, the way copper is because copper is relatively cheaper. Uranium at $75-$80, that's not the bargain basement. So, but the probability of it going up, I think, is extremely high. And again, the better companies that are actually doing it, building their mines on schedule or on budget, or meeting their targets, I think they're going to be rewarded. And not somewhere, not inevitably, not imminently. I mean, this year.
And okay, one more.
Go ahead.
What could possibly be? We've had so many supply demand side factors piling up. What could possibly be that upward trigger?
For uranium?
Yes.
Well, the restarts are a big deal. Japan has been working on that. And the thing about a restart, as opposed to say, oh, we approve a new small modular reactor design. Well, it's just a design. It'll be 10 years before somebody builds one. And, when will they stabilize it? But the restarts, they create immediate demand. So that is something that's happening now. Even the U.S. is looking at restarting that plant or that reactor at 3 Mile Island. Like that's such a jaw-dropping event for something like that. True sign of the time. So a revamping of the restarts is a big deal. Peace in Europe would be a big deal. Europe's largest nuclear power plant is idled right now. You start that up again, and that's a substantial source of demand there. But there's also supply issues. Like I was saying, company after company has been reporting delays, or cost overruns, or just flat out, slashing of guidance of how many pounds they're going to be able to bring to the market as they start up. So I'm not sure that's really priced in yet. I mean, I'm looking at spot prices down, and I'm thinking, somebody hasn't gotten a memo here. I mean, if anybody was worried about a flood of supply, they shouldn't be now.
Okay. So we've got still a number of things to keep an eye on. All right. I'll wrap it up there unless you had any final thoughts that you want to share.
Yeah, just one more thing on this Trump trade. This isn't really the trade, but I think everybody should remember that owning bullion, physical gold and silver that you can hold in your hand, it's not a speculation. It's not an investment. It's insurance. It's safety. It's physical wealth that you can be long with no counterparty risk, no short. Right? And in volatile times, that's not a bad thing to have some allocation to that safety.
Okay. I think a good place to wrap up on. Thank you very much for the time. Really good to have you here.
Thank you, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Lobo Tiggre. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.